I got some good news for you. Good news when it comes to the real estate market and good news when it comes to mortgage interest rates. Very excited to share this with you. Thanks for tuning in. I want to talk to you a little bit about where mortgage rates have been, where they are today, where they're potentially going. Also want to talk about how this election cycle may affect mortgage interest rates and also affect the housing market on the whole. So I want to share a little bit of my screen with you. I put together a little bit of a presentation here to share some data, some quotes from some economists, and looking forward to sharing this with you. First, I want to share this. It's a headline you probably saw a couple weeks back. The Fed Chair Powell signals time has come. September rate cut is likely. Jerome Powell indicated during his speech in Jackson Hole that the Federal Reserve is expected to begin cutting interest rates on September 18th. Citing concerns about the job market. So September 18th is coming, but let me tell you this, interest rates have already begun to change. I'll get to that in a moment and tell you the implications of just this announcement and other things happening in the market. Interest rates have already started to go down from a 30-year conventional mortgage perspective, and some exciting good news for you if you're looking to buy or if you're looking to refinance and you took a little bit higher interest rate in the last 18 months. More good news. Here we go. Majority of economists expect two cuts this year. They expect two cuts this year, not just the September 18th cut, but an additional cut. So we look forward to September 18th, where they finalize how much that cut's going to be. But they also begin conversations and share some news about where they see the next cut coming, when, how much. The mortgage interest rate will respond to that. The mortgage market responds when they make these announcements, not just when they make the cuts official themselves to the Fed rate. So let me talk a little bit about where we've been. I just talked about where we're potentially going, but where we've been and where we are today, I think is very exciting as well. In April of 2024, the average mortgage interest rate was 7.52. This is a 30-year fixed conventional rate. And so I put some numbers together here, and I'd love to compare them to where we're at now. I ran these quotes today. Today, the mortgage interest rate side by side here is 5.625. This is the mortgage rate at the mortgage source. Today, this is something we can lock in for you. We're very excited about this move. And so you might look at these numbers and think to yourself, 7.52, I didn't realize it got that high. Or maybe you're thinking to yourself, yeah, we bought in April of this year and whoa, we had a 7.52 interest rate. It's high, right? And so, but you also might be processing this and saying, hey, 5.625, that's not that low, but look at the difference this makes, right? It's not for everybody to consider buying as a result of this or refinancing as a result of this, but it's for some people, right, that would like to buy a house, or maybe they bought in April or another time in the last 18 months when rates have been higher. This is something to really look at. This can make a big difference for you and your family. Check this out. The difference in monthly payment from 7.52 to 5.625 is $500 on a $400,000 loan. Now, we ran these numbers based on a $500,000 house with 80% leverage at $400,000. And if you had that interest rate of 7.52, you can now save $500 if you were to refinance today. These are big numbers. This is good news. I want to share with you also the details of all the things that went into that loan quote, because that's what I'm supposed to do. So here it is. So that we're all official, I've shared with you the details of that quote. Good news happening. Where we've been, we've had higher interest rates. They're now coming down, and we're finding out that they're going to potentially continue to come down as well. More good news. What's happening in 2025? Generally, Lawrence Yun, chief economist at the National Association of Realtors, says, generally, the rate cutting cycle is not one and done. 6 to 8 rounds of rate cuts all through 2025 look likely. Wow. All right, let's look at home prices a little bit, okay? So 2025 home price forecasts. You might have heard from many that the sky was falling, that this couldn't stay. It's a bubble, right? All these prices on homes are going to go down, but that's not what the professionals are saying at this time. As of August of 2024, just a couple weeks ago, Each of these individual forecasts were made. The average is saying that 2025 home prices will appreciate by 2.6 and as much as 4.4% in 2025. Here's a little analysis on this from Dennis Shershikov. He says this: when it comes to the real estate forecast for the next 5 years, I'm cautiously optimistic. I believe we're going to see a lot of ebb and flow over the next 5 years, some highs, some lows, but overall a healthy market. Prices should continue to rise, though more slowly, and buyers might enjoy more options as inventory expands. So some exciting news, good news about mortgage interest rates. Also good news about housing prices. The bottom's not going to fall out. That's what economists are saying. It's going to stay steady in growth. Your house is going to continue to appreciate in value for those looking to buy. If you're waiting for the bottom to fall out, from what we're seeing here, it's not going to happen. You know, rates are falling, so you're going to get a more affordable payment. But it might be a great idea to start looking now. And as the market starts to move, before these rates get lower and buyers start to flood the market as a result. Get in there, start looking at houses. I think it'd be a great time to do it. Another big question I know that all of us are asking: how will the election impact the housing market? How will the election impact the housing market? I brought together some interesting statistics and some analysis on this as well. I thought this was good to start out with. It's from Al Lord, CEO of Lexerol Capital Management. He says this: presidential election years affect the national housing market and mortgage rates through three interrelated channels: uncertainty, policy expectations, and consumer confidence. What he didn't say here was presidential elections where Democrats or Republicans get elected affect the national housing market and mortgage rates. Didn't say that, right? No, he said, no, the rates are affected by three interrelated channels: uncertainty, policy expectations, and consumer confidence. From what I'm seeing here from this election cycle, you're going to have a large part of the country that will be affected negatively, regardless of which candidate gets elected, and there will be uncertainty, policy expectations will be negative, and consumer confidence will be negative. But on the inverse, right, whichever side gets what they want and gets the candidate they're looking for, they will be more certain. They will have high expectations of policy, and their consumer confidence will soar. So the answer to the question of how will the election results affect the housing and mortgage interest rate market, it really comes down to your city, to your county, to your state, to your environment, and the certainty of the people around you and how it affects your specific market. So generally, when it comes to mortgage interest rates or housing, is the election of one over the other going to affect that? Not on the whole necessarily. That's not what we're seeing in previous, but it may affect certain markets in certain ways. You can imagine how that would go down. So one other interesting stat I thought was great here. We know about this in the real estate market. There's a seasonal drop in sales, right? And that happens because of the holidays. It might be longer in some areas that have cooler weather. It might be shorter in some areas that have warmer weather. But we know that in the months of November, December, January, the housing market slows down as far as sales. Something interesting that we're looking at here is the fact that in presidential election years, it seems to slow a bit more, right? There's more distractions happening. There's more things happening in the news, right? There's other things people are thinking about and concerned about in these election years, at least in the previous ones, that causes the housing market to slow a little bit more when it comes to sales. So interesting thought there. Another thought I want to share with you. Home sales went up after 9 of the last 11 presidential elections. So the trend says that there'll be more homes selling after an election, right? Over 9 of the last 11 presidential elections, an election cycle seems to be good for homes selling. So good news there. Another thing, existing home prices went up after 7 of the last 8 elections. Oh, good news there. So we have an election cycle. It sounds like the trend is that housing prices will continue to rise even after this election cycle based on the previous data. Another data point here, mortgage rate decreases leading up to 8 of the last 11 presidential elections. Turns out we're seeing that right now. The trend is happening right now. Like I said before, mortgage interest rates are significantly down today even from what we saw in times earlier this year. The trend is happening. Mortgage rates are decreasing already. So how will the election impact the housing market? There's some of the historical data. We do know now, I mean, it makes a lot of sense that the housing market and the mortgage market is really more based on the sentiment of the people, right? The economy, the confidence, than it is based off of one person getting elected over the other. So just some analysis there. I would love to talk with you more about this. Would love to hear your feedback and thoughts. And if anyone is looking to buy or refinance and wants to talk about the rates and how they affect your family on a monthly basis through the payment and the affordability, I would love to chat with you about that. Otherwise, I'm just glad you got to listen to this, and thanks for hanging in there with me as we kind of process this together. All right, have a great day. Talk to you. Bye.